the first wave of infections and fatalities, sadly, and quarantine and lockdown and all that. And the stock market had just dropped 30%, over 30% from February 24th to March 23rd. And so they said, we really want to book on this. It's really important. There's going to be huge interest in this. And can we do this? And I said, sure. Doing the research at night, then waking up the next morning and writing up the research and other observations. I mean, obviously the disease was expanding, the economy was collapsing, but the amount of academic literature on the subject was, you're getting 10 papers a day coming from all over the place, and that was good, but it was an enormous amount. But when I first discussed it with my publisher, they said, well, Jim, we think you're great on the economy and capital markets and central banking, and all that's really important, and that's what we want you to write about. But keep away from the epidemiology and the immunology, because you're not a scientist, you're not a doctor. And I said, hold on, that's like asking someone to write about property damage in New Orleans in 2005 and not mention Hurricane Katrina. I said, you can't do that. You obviously, the pandemic is the catalyst or the cause of the depression, and you can't understand one without understanding the other. So I said, I'm going to do both. I teased her a little bit. I said, well, I do have 2 degrees from Johns Hopkins, so I'm not intimidated by natural science. I'm not a doctor, of course, but I'm comfortable in the field. And when I started doing the research, I said, well, this is going to be straightforward. There's a bunch of conspiracy theories and fringe theories and just wacky speculation over here, and there's a lot of good science by reputable clinicians and PhDs over here, and just kind of discard this and focus on this. And that's what I did. But what I discovered, it was easy to discard the junk, but when I got into what I'll call real science, I discovered quickly that the scientists don't agree with each other. I can show you papers that say, you're a fool to go out without a mask. Masks are the key to this whole thing. Everybody mask up. That's the way we get a handle on the pandemic. I can show you other papers by equally qualified people, PhDs in virology and epidemiology, who say, no, masks don't work. The virus is too small. It goes through the weave. And so, but my point is, without even taking sides in that, just as a writer, and I did present both views, and all that information is in the endnotes. The book has over 200 endnotes, and they're all fairly technical. So I tell people, if you don't like something I said, don't argue with me. Go to the footnotes or the endnotes and argue with the scientists. But I tried to, when there were divisions like that, I tried to represent both sides fairly. But I usually do come down on one side or the other based on my own view of the evidence. So that made it more challenging. And then you also have this whole, where did the virus come from? I have a chapter on that. Well, there's the wet market theory, which I thought last spring was a lie, basically Chinese propaganda. That's even more apparent today. You have the laboratory theory that it came from a laboratory, particularly the Wuhan Institute of Virology. Good evidence that was the case last spring. That's much stronger today. A ton of stuff has come in literally in the last couple of weeks bearing that out. I was a facilitator and then a participant in the first ever financial war game ever conducted by the Pentagon. They didn't need any help from me on war games generally, but they'd never done a financial war game before, and so they needed to tap the financial expertise, and I was asked to help with that. I'm going to persuade my China team colleagues to basically announce a new gold standard. And we've accumulated enough gold, and we're going to say for now, and our currency is backed by gold. We're going to put the gold in Switzerland to keep everybody happy. We're going to issue notes from a bank created in London under English laws to keep everybody happy. But here's the thing. We're going to say from now on, if you want our exports, you have to pay for us in this new currency. We're not taking dollars anymore. And furthermore, and if you want some of this new currency, you can deposit your gold in Switzerland and the bank will issue you some currency, so you're in the system. Or you can trade with us and run a surplus, and then we'll pay you in the currency and you can use that to buy our stuff, or we'll give you loans. But one way or another, we're done with the dollar. And obviously this is very forward leaning, but the whole idea of a war game is to help the Pentagon think 5 or 10 years ahead. I persuaded my friend to get the Russia team to join us. It ended up, Russia said they would do it. I couldn't persuade my Chinese colleagues. By the way, one of the guys on the China team My China team in 2009 ended up running the Asian desk at the National Security Council for the next 8 years. So the first thing that happened when because you go to your embassy or conclave, you come out and you stand up at the podium, you announce your plans, and then everybody reacts and it's discussed, etc. The first thing that happened is there was a group. So we had the red team, the yellow team, the blue team, as the case may be, and they're all different countries or areas. But there's a white team, which are the referees. They decide what you did. And the first thing they did when we announced the gold move, I said, this is a war. There are no illegal moves in a war. The whole idea is to be out of the box or live in a world where there are no boxes. That's what we're doing here. The dollar value of Russia's gold exceeded the dollar value of its treasury securities. They have 20% of their reserves in gold, and the value of their gold is more than the value of the U.S. treasury securities. They're dumping treasuries, buying gold. Exactly what we warned the Pentagon about 10 years ago. Currency wars don't happen all the time. They might only happen twice in a century. But when they happen, they can last for 10 or 15 years. That's how long it takes to sort out. I don't want to get into the weeds on China's internal monetary policy. I could, except to say that they're grossly over-leveraged. The economy is investment driven, not consumption driven. They're about 45% investment. The U.S. is about 25% investment. So that gives you some idea of how investment is to the Chinese, which is actually okay if you're investing in productive assets that pay the way. They're not. They're wasting the money. I've been to China many times, been going back and forth there for 35 years. I've been out in the countryside. I don't just stick to the hotel lobby in Beijing. I got mud on my boots visiting these ghost cities. A lot of people don't understand what a reserve currency really is. You get a report from the IMF. So 85% of global reserves are in dollars or euro, which means the only meaningful exchange rate in the world is the euro-US dollar cross rate. A couple other things. Aussie dollar is tiny, believe it or not, good currency, but not a big part of it. And China's like this kind of invisible 1% sliced down at the bottom. So for all the criticisms of the dollar, and there are plenty of them, you're not going to dethrone the dollar as the leading global reserve currency unless you can show me what you're going to replace it with. And there's one and only one contender in the world today, which is gold. So that's a whole other conversation. I'm not saying we're going to be on a gold standard tomorrow. We had $1 trillion, what are called baseline budget deficits going into the pandemic. So with no pandemic, we were going to have $1 trillion deficit in 2020 and 2021. On the money supply, you can print all the money you want. But Milton Friedman was wrong, the monetarists are wrong, the Austrian school is wrong. Money printing does not cause inflation. What causes inflation is something called velocity, which is the turnover of money. The money has to be lent and spent. Banks have to be lenders. People and businesses have to be borrowers. You have to be spending it, get it in circulation, in other words, in order potentially to have some inflation. Increasing the money supply doesn't work because velocity is declining. Increasing deficits doesn't work because people are saving, not spending, and they're preparing for worse outcomes. So neither one of these, you can call it money printing or spending, but don't call it stimulus because it doesn't stimulate. We're not getting out of this. My advice is, my recommendation would be buy up to 10%. That's enough. So if I'm right, and obviously I think I am right, I wouldn't be saying this, but if I'm right about gold going to $10,000 or $15,000 an ounce in the next several years, you're going to make so much money, even on a 10% allocation, that's basically going to insulate the rest of your portfolio. But I also recommend a big slug of cash because people go, well, cash has no yield. And I was like, well, okay, but we could be in for deflation, not inflation. And in deflation, cash can actually be your best performing asset because the real value is going up. Your purchasing power is going up. So it makes it a winner and also reduces portfolio volatility. And finally, cash has embedded optionality. If you're the person with cash, visibility is not great right now. I do forecasting all day long, but I would say that there's a very high degree of uncertainty. So if you're the person with cash, as you get visibility, you can pivot. Maybe you want to buy more gold. Maybe you say, hey, it's all good, let's buy some stocks. Bitcoin has no value. I did an interview in December 2017. At the time, Bitcoin was going up almost $1,000 a day. There's no wealth creation in Bitcoin. It's just, you're just transferring wealth between buyers and sellers, but you're not creating any wealth. If you made money in Bitcoin, I hope you can sleep at night because some people are committing suicide because of what they lost.